Welcome back to another episode of Not Financial Advice. My name is Sean. Today is Friday, February 9th, near the end of market close 2024. And today we're going to be starting out a new series here called Top 3. And our inaugural episode for this series will be one where we're going to take a look at Joseph Carlson's top 3 investments, and we're going to sort of rate them together. So we're going to jump right into that. We'll start with an update on how my portfolio is doing today, and then we'll get to the topic right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, I'll ask you to like the video and subscribe to the channel. And if there are any other investors or even ETFs that you'd like for me to take a look at and review the top 3 holdings, just drop that in the comment section below. Some other ones that I have in mind are going to be SCHD. I'm going to do a video where I sort of review the top 3 holdings there. And I might do a video on Berkshire Hathaway and review their top 3 holdings in their publicly traded a portion of their portfolio as well. So if there are any investors or ETFs where you'd like to get my opinion on their top holdings, just leave that ticker symbol in the comments below. And let's start off today's video, as we often do, just checking in on the old portfolio, seeing how everything's going. I have a pretty diversified portfolio. And so looking at my top 5 gainers and decliners on the day can often give us a sense of how the market is feeling. And so today I'm up $400, which is good for 0.56% gains. The market is up 0.54%. So I'm just slightly beating the market today, up around $400. What we can see is the Dow Jones is lagging. The NASDAQ is outperforming, and small cap Russell 2000 is outperforming strongly. And so that's that. Let's take a look at my top 5 gainers and decliners. And so what we have here, 1, 2, 3, 4, 5. So my top number 5 top stock of the day is going to be Google, up 2.04%. I then have U-Haul, or Estee Lauder, are neck and neck, up 2.33% is Estee Lauder. Same percent gain for U-Haul as well. And then nicely, I have my single largest stock holding, Amazon, is up 2.9% today, with Coinbase leading the pack, up 6.2%. So let's take a look at the bottom 5 decliners in the portfolio today. And what we can see here is that my 5th worst performing holding is going to be Scott's Miracle-Gro, down 3.1%. Tyson Foods down 3.1% as well. Down 3.3% is going to be Pepsi. They had a slightly negative quarterly earnings report today. You also then have Seneca Foods down 4.6%, and TrueLeave is down 5.6%. And so that's the update on the portfolio, how everything's going. Sitting at $71,075. So let's jump into the topic of today's video right now. So for today's video, let's start with a little bit of background. So who is Joseph Carlson? He is a pretty prolific financial YouTuber here on this platform. One of my favorite investors, and he has a pretty big channel where he shows in real time his portfolio on red days and on green days alike. And he often will do a series where he reviews the top 3 holdings of super investors. But with where I am in the financial YouTube community, I got the idea that I might like to take a look at his top investments, as he's someone who's added a lot of value to the value investing community here on this platform. And so Joseph Carlson is, to my understanding, a millennial in his 30s. He lives in the United States. His investing sort of methodology is to invest in mid and large cap stocks, particularly in mega cap stocks, and he has a tilt towards those stocks, oftentimes technology companies, but not always. And he certainly is a value investor, but he's one that is less sensitive to PE ratios. And he's one that certainly is looking for very high quality businesses with significant amounts of momentum. And so I think that does justice to Mr. Carlson. And so let's take a quick look at just some screen grabs from his two different YouTube channels where we can get an idea of what his top holdings are. And so he has two portfolios. The first one is the passive income portfolio. At present time, worth around $650,000. And if we just play this here, we can sort of see what some of his top holdings here are in his larger portfolio.
If you like these type of videos, make sure you hit the like button and the bell notification so you get future updates.
And so what we can see here is in his main and larger portfolio, his top three holdings are going to be S&P Global, Mastercard, and then also that his second largest pie in M1 Finance is tech. And within this passive income portfolio, his largest holding there is Microsoft. And so those are going to be the three companies that we're evaluating. We're going to do a bonus review or just sort of an honorary mention. He has a secondary portfolio worth around $200,000, putting his total invested assets around $850,000, where his main holding over there in what's called the Story Fund is going to be Amazon. And so I've recently done a video with Amazon. That's the honorable mention. So I'll be leaving a link for my review of Amazon in the end screen here of this video. So let's jump into analyzing his top three holdings: S&P Global, Mastercard, and Microsoft. I'll ask you to like the video and subscribe to the channel. And now we're going to take a look at those companies. And so now would be a good time to get some disclaimers out of the way. We're here on Qualtrim, which is a suite of software that I pay for, not one that I'm affiliated with. This will be my first time mentioning. This is actually a suite of software that Joseph developed, and so I pay for it. I'm a huge fan of his, and this video is certainly meant to be honorific. And so, you know, using his software to analyze his stocks, I just want to make that, that disclaimer that I'm a big fan of his, and I think that he's a fantastic investor. Someone whose first, investment that he's referenced was in 2017. So he's been investing for some time. Not sure when he bought his first stock. I might ask him that. But additionally, a little bit more about his investing philosophy is going to be looking for toll booth or service-based companies. So companies that have light capital expenditures, companies that can grow organically, and then he's always looking for companies that are either monopolies or duopolies. So looking for companies with huge, strong moats. So with those disclaimers out of the way, I will be leaving a link for both of Mr. Carlson's YouTube channels, as well as a link for Qualtrim in the description below. And so I'm going to ask you to like the video and subscribe to the channel. And let's start taking a look at Joseph's top holdings. So first and foremost, his single largest position is going to be S&P Global. And so taking a look at it, what we can see is that a few fold. So this is going to be a large cap company, 138 billion. It's truly a large cap, not a mega cap, but a quite big company with a forward PE ratio of about 32, which is kind of high, but that's in line with the type of companies that he enjoys. Justifying that, you can see a healthy free cash flow yield of 2.3%. Additionally, we can see that S&P is a dividend payer and one at a low payout ratio, certainly a dividend growth story, which of note was where Joseph's investing, philosophy and strategy started. Um, and it's still part of, I believe what his strategy is he loves seeing companies that can grow their dividend, among many other factors. But if you're not familiar with this company, this is one that maintains the index, the S&P 500. And so anytime that you buy an S&P 500 ETF, S&P Global gets a kickback. And so this is very much so a pick and shovel company or a toll booth company in that sense. And they're also a credit rating agency. And so when companies are looking to be evaluated to determine the appropriate levels at which their bonds are sold, they have to hire either S&P Global or other companies. And he owns the number one as well as the number two slot. But this is the primary credit rating agency and also one involved in indices, along with other revenue streams such as selling data. And so looking at his first investment, let's go through some check marks and some minuses. So let's look at revenue. Over the last 5 years, revenue's been spiking up 12.3%. You can see historically it's at around a 9% revenue growth rate. And in the last 2 years, revenue's spiking dramatically up 16% year on year. And so this will be a big green check mark on Joseph's top holding for revenue growth, S&P Global. Now, let's get over and take a look at our next metric. For S&P Global, let's take a look at free cash flow. And so this is going to be free cash flow minus any bonuses paid to executives. And so it's growing quite nicely here since 2016. A really good looking free cash flow chart. Definitely up and to the right. There are some years that are better than others, but free cash flow is growing at about 14% a year over the last 10 years and around 4.5% over the last 5. And so free cash flow growth for S&P is going to be another check mark. We can certainly see or start to see why he's made these investment decisions. So let's keep on going and take a look at some other metrics. Earnings per share for S&P Global look fantastic, pretty consistent up and to the right, about 7.6% over the last 10 years, 5.7% over the last 5. So looking really solid. Another check mark yet again for S&P Global. So let's see what else we can see. Let's take a look at their cash and debt. And so I'm not as intimately familiar in this one as I don't own the company. This looks potentially like an acquisition. So something more certainly to look at if this is something you're interested in, or refer yourself to his channel, any of the videos he's done on this company. Again, those descriptions will be in the comments below. Not having a detailed understanding of this company, it looks like they've held cash and debt pretty reasonable throughout times. I'm sure that they have a great credit rating as they're a credit rating agency. And so they've just taken on debt. I'm inclined to rate this as a neutral. It obviously matters what they're using this debt for. So let's take a look on a quarterly basis and see what they're doing here with their cash and debt. It's remaining about flat while their revenue is starting to grow. So I'm going to give cash and debt a neutral rating for S&P Global, but that's just my opinion from a bird's eye view. So looking on to our next metric for S&P Global, we can take a look at their dividends, see that they are growing at the rate of about 12.5% a year on average over the last 10 years. That's huge, crushing inflation. It does not look like in the last 20 or so years that they've cut. This looks like they may have issued a special dividend if the data is correct. So with their low payout ratio, lower starting yield and high growth rate, I will be giving S&P a check mark for dividends. Now, getting into our next metric, let's take a look for S&P Global at their shares outstanding. This does look like some sort of acquisition here was financed not only with shares, but also with debt. The overall trend is pretty strongly down. And so I think this is a one-off thing. Over the last 10 years, the dividend or the share issuance has been at a 1.3% increase per year. I see this as a one-off event, and so I'm going to give this a check mark still. So moving forward, I'll ask you to like the video and subscribe to the channel, but let's take a look at ratios for S&P Global. So looking at their returns on capital employed, I'm very, very high, a median, somewhere probably in this 35% range or 33% range. It's quite high. This is also pretty characteristic of the type of investments that Mr. Carlson likes to make. So a company that can take shares sold or debt issued and reinvest very profitably in themselves. This can be one of the biggest drivers of returns on a stock. And so I certainly see why he likes it. A big check mark on return on capital employed. Let's take a look at their bottom line profit margin. growing in a very healthy fashion, super high bottom line profit margin of around 30%. Yet another check mark on S&P. And then taking a look at expenses, I can see that they're going down and to the right. So again, he likes capital light businesses. Expenses will be a check mark again for S&P. And then lastly, we'll rate valuation on a PE multiple. Looking over the last 5 years, you see a range of 31, uh, and it's around 33-ish. So this will it's sort of it is in fact at the lower range of its valuation, I suppose, from what I can see here. So this will be a check mark, our last metric here on S&P Global. So overall, a very attractive looking company. And I can certainly see why this is Joseph's top holding. Like the video, subscribe to the channel, and now let's bounce over and take a look at Joseph's second largest holding, Mastercard, right now. It's going to be ticker symbol MA. So let's take a look at Mastercard, Joseph's second largest holding. A large cap company, 430 billion, a forward PE around 32, a free cash flow yield around 2.6. Very similar on these just sort of flyby metrics for Joseph's top holding. We can see low dividend with a very low payout ratio, so one that certainly looks like another dividend growth story. As well as a high quality and momentum based stock. So let's take a look at MasterCard, an issuer of cards, not unlike Visa. This is the one that he likes. I own Visa. He likes MasterCard. I think they're both great. Revenues up and to the right over the last 5 years, up around 11%, which is in line historically. So really good growth here. Revenue is going to be a check mark for MasterCard in Joseph's portfolio. Let's take a look at free cash flow. So adjusting for stock-based compensation, this free cash flow chart looks impeccable, up around 12 or so percent between the last 5 and 10 years. This will be a massive check mark for free cash flow growth. I love to see it. Let's also take a look on Mastercard as far as earnings per share. Again, absolutely fantastic, even stronger than their free cash flow numbers, up around 16% for the last 10 years, steadily, consistently. A green check mark on Mastercard in Joseph's portfolio, his number 2 holding. Looking at cash and debt, this looks very reasonable. Not a lot of commentary to offer on it. I'll be issuing Mastercard a check mark on their cash and debt metric. Let's look at dividends up and to the right. Massive dividend growth at nearly 20% a year annualized over the last 10 years, crushing inflation. They've never cut before. A massive check mark on dividends with Mastercard in Joseph's portfolio. So let's keep on taking a look here. Looks like shares are going down steadily. In the last 20 or so years, they've been going down about 2.5% a year. That's fantastic. This will be a green check mark for shares being reduced with MasterCard. Looking at ratios, I'm sure we have very good things that we can see here. Return on capital employed is a median of over 30%. Absolutely fantastic. A check mark on Joseph's number 2 holding. Looking at their bottom line profit margin, it's growing up into the right, extremely high, over 40% as a median number in recent times. Another check mark. And so, will there be an X? Will there be an X in anything as far as MasterCard's balance sheet? So, let's look over the last 10 years for their historic valuation. It's lower than average, a check mark. Very nice. And then expenses are going up into the right. Although they have a very high return on invested capital, let's go ahead and rate this as our first X here, first and only X for expenses going up into the right. Another fantastic investment. Now, what we'll be doing is looking at our last holding for Mr. Carlson, which is Microsoft, as he describes one of the most, immaculate balance sheets that one could find, hard to find any issues with it. And so, unless you like the video and subscribe to the channel, let's breeze through this. This is trading at a pretty high PE ratio for it of around 36 and a third percent, a little bit of a lower free cash flow yield around 1.9%. What we can see here is a similar setup for dividends, a low starting yield with a very safe payout ratio, a dividend growth story. And let's take a look at Microsoft's revenue growth, rather, around 12% over the last 10 years. It's really ramping here. So that's going to be a check mark for Microsoft, Mr. Carlson's third largest position. Free cash flow, looking fantastic. Over the last 5 years, their free cash flow growth is accelerating to 12% a year. Absolutely fantastic. Another check mark for free cash flow on Microsoft, rather. Let's see what else we can see. Earnings per share accelerating over the last 5 years at 36%. A massive check mark for Microsoft. Cash and debt on Microsoft. Their debt has been declining. Their cash is fairly steady. This will be a large check mark for Microsoft, Joseph's third largest holding. Looking at dividends, we already sort of talked about some of those metrics, growing at a great level, 10 and a third percent over the last 10 years. They've never cut. A big check mark on dividends for Mastercard. For Microsoft, rather, excuse me, looking at Microsoft on shares outstanding, they're going down 1.3% a year, a check mark for dilution, shares going down. Return on capital employed is high. It looks like a median number is near 25%. That is going to be a check mark for returns on capital employed. And then on bottom line profit margin, it's growing and it's sitting around 35%, 33%. Absolutely fantastic. A check mark here on bottom line profit margin for Microsoft, Mr. Carlson's third largest holding. Lastly, let's take a look at relative PE valuation, or second to lastly, as I should say. It looks like it's in its median range, so I'll give this a neutral rating. And finally, we do have expenses going up, although they have fantastic returns on capital employed. We'll give this an X rating as well. And so we can see why, Mr. Carlson has done so well in his investing journey. $850,000 of capital in his personal portfolios, sitting around or well over 100% in all-time returns since 2017. A great investor and just a good guy, and someone that I'm really happy to bring extra light and attention to, as he certainly deserves it. And he's been a great influence to me in my investing journey. A huge amount of respect for Mr. Carlson. So this rounds out our video on the top 3 holdings for this series. And if there are any other investors, be them super investors or folks on YouTube, or be it ETFs or conglomerates, if there are any other funds or investors where you'd like for me to take a look and sort of evaluate their top 3 holdings, just leave that name of that entity in the comment section below. Until next time, my name is Sean. This is not financial advice. Thanks so much for tuning in, and I will see you on the next one.